Yeah, no, it's been really an incredible week. Not only in the markets, but we've heard from some very influential voices throughout this week on this program. Let's listen to what they had to say about the markets.
The conditions for a bear market just are not present.
I agree with Lee. I mean, I think the stock market, I know I've said a bunch of times, is going higher.
At the end of the day, the economy is great, rates are low, so you want to be an investor.
The index having a correction at the end, much like in 2018, and then of course 19 was a good year. So, that's the setup.
All right, Bryn, who's going to get the last word here? Is Mike Wilson going to be right, or do you side with those who are more bullish?
I'm gonna go with those who are more bullish, only because I think it's like a futile attempt to try to predict some type of sell-off. If you go back to 1980, the average intra-year peak to trough decline since 1980 is 14%. So expect a 14% peak to trough decline in any 1 year. So I don't think that's like a big stretch to say we think we could see a sell-off, because so far we've only seen a 4% peak to trough decline. That being said, this is a buy the dip market, and I think that's an exciting time. Earnings are here. I mean, you can look at the tech stocks today. Financials have had a great rebound. It looks like breadth is strengthening out a little bit. I mean, tech is doing really well today, but the financials definitely rebounded from Friday's, mini panic. So I'm going to stick with Lee, Rick Reeder, and myself to say buy the dip and stay invested.
Yeah, Mike Wilson, just for more context, he's calling for a 10% correction from here. Let's listen to exactly what he told us yesterday, and then we can continue to chat on the other side.
I think the markets have been going through a bit of a rolling correction really since March, and that fits our narrative that we've been sort of espousing here, which is it's more about rotations than it is about the index. And, look, when this happens historically, Scott, when you get these sort of rolling corrections, the market always goes after the weakest links first. It reminds me a lot of 2018. We kind of had a similar conversation. We were talking about a rolling bear market. We thought it would be more severe then because it was end of the cycle. This is still, early to mid cycle, but, rolling corrections can happen during bull markets, and that's what's going on. So we think it ends with a correction at the index level, and that would be very helpful. That would, then you can kind of reset the playing field. Valuations will be more justifiable, and we can focus back then on earnings growth.
All right, Degas, what do you think about what Mike Wilson had to say? I mean, look, directionally, he's been right. We have had a rolling correction, one that he's been calling for. He's just looking for some more severe downside from here. Is he going to be right?
Yeah. Scott, I don't think he's right, because he's talking about another 10% drop. The difference between 2018 and today, we did not have the same level of stimulus pumped into the market. And so that's keeping that positive sentiment is really pushing the market. Also, we didn't have a pandemic that closed down the economy, and so companies cut costs. What we're seeing now, I believe about 23% of the S&P has reported. 87% of those companies have beat EPS earnings by about 16%. They have beat on revenue about 86%. They beat about 6% on revenue. So we're beating on earnings, we're beating on revenue, and the only thing that's holding this economy back is the variant, but I don't see a pullback of 10%.
Yeah, Amy, how do you see it? Because we have had a volatile week. We certainly feel better today than we did a week ago today, and then the carry through on Monday. You still do have the Delta variant out there, and it's likely to get a lot worse before the COVID situation here in the United States gets better. The market's just going to continue to look through all of that and avoid a stronger pullback as Mike Wilson thinks is coming?
I think it will, and I think it will for not great reasons. I do think the market's overvalued, and I think it's going to be a tough decade. The 2020s will probably be a tough decade, but I think the market is being driven right now by inflows. I'm a big believer in the inelastic market hypothesis, which posits that there are fewer sellers due to fixed allocations, and when you get huge inflows like this, they have a multiplier effect on the market. 2021 has been a record year of inflows, largely due to fiscal largesse and stimulus. Goldman expects another $500 billion to come into the market before year end, and you just don't have a lot of sellers. So I don't think it means that, I don't really think it's earnings. Earnings are great, but nobody expects these earnings to continue. We're going to revert after the pandemic. I think this is largely a liquidity-driven market at this point, but the liquidity's still there.